Let's get some common sense about the stock market now with Craig Bolanos, the CEO and co-founder of Wealth Management Group, here to take some of those fears away. And Craig, 2022 so far has been one of the worst years to invest. The S&P is down about 19%, but tell us how, when the market is so bad, it's actually good.
Could it in fact be so bad that it can actually get good? I mean, the truth is what you said. It's been one of the toughest stock markets to a year. In fact, probably the worst start to a year since 1970. And this has caused what I call sentiment, pessimism, how people feel, to be absolutely rock bottom. Now, that being said, I don't know that history is going to repeat itself, but clearly, time and time again, history oftentimes rhymes. So the first thing we have to look on the screen here is what we call a bad halftime chart. And what this chart shows is that every single time, without exception, that the market has dropped at least 15% by the end of the second quarter, the market has bounced back an average of 24%. So maybe, just maybe, these losses we've seen thus far are temporary. If history's our guide, and it's the only guide we have, it might just indicate such. Number two on my list is what I call a horrible quarter chart. Yes, a horrible quarter chart. You know, another optimistic piece of news here is whenever previous quarters would drop by that particular magnitude, they've been up on average as much as 17%. So the truth is, maybe there is some light at the end of the tunnel. And finally, just as the month of June has ushered in another wave of selling, in fact, we had not one, but 2 weeks of back-to-back losses of 5% or more. That again is a rare occurrence. You can see by this chart it's only happened several times in history, but the ensuing period thereafter has averaged an astounding almost 28%. So when I look at a bad halftime chart, a horrible quarterly chart, or back-to-back 5% weekly drops, maybe just in fact being so bad is something that's good coming on the other side.
What should long-term investors do as they ride out the uncertainty in the stock market?
Well, I think we just need to internalize it. You know, just because it's written in history doesn't mean it's going to happen again, but history has proven to be a good guide time and time again. And even if we look back to the most recent issues, think about how terrible markets were in the March of 2020. Those who panicked, and that's why panic is never an option, and sold out all of their positions, got massively whipsawed as stocks rebounded quickly. And ultimately, it's about clearing 3 foothills to a bottom, making some level of progress where people actually believe that inflation's going to come down, getting China to reopen, Shanghai to reopen, improving the supply chain. We're starting to get some indications of that. And the market doesn't necessarily need to have an armistice. The market just needs to have a belief that Ukraine isn't going to get any worse, aka we get to a stalemate. But the bottom line is, look at your asset allocation. Think about why you're investing. Is it for the short term or is it for the long term? Make sure you stay diversified. Be making some modifications here because the environment has changed. Continue to focus on excellent rebalancing protocols with good security selections, and this too shall pass. If you want some help, if you want to learn more, go to our website. That's investwithwmg.com. That's investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.